So today I'm very pleased to be joined by Mariano Federici, Vice President of K2 Intelligence, and coming very recently from a role as President of the FIU, or the WIF, in Argentina, and a leadership role in the Egmont Group of Financial Intelligence Units worldwide. Mariano, delighted to have you join us today.
It's my pleasure to be here talking to you, Nick. Thank you very much for the invitation.
So in this series, we are engaging with leaders and innovators in public-private partnerships around the world and individuals who've been instrumental in establishing partnerships and developing those partnerships to support information sharing between financial institutions and public authorities to better detect and disrupt and prevent financial crime. Mariano, you've got a wealth of experience in this space, but perhaps we could start off with some of your regional and international insights into where are we now with regard to Latin America as a whole and the extent of public-private information sharing to detect financial crime.
I think while there is a greater appetite and a greater interest that has evolved in Latin American countries to establish public-private financial information sharing partnerships, and several countries are looking into the idea and trying to assess the possibility of incorporating these partnerships. Unfortunately, presently, there's the vast majority of countries essentially work in the traditional way, where information flows in a single direction from the private sector to the public sector with very little guidance in advance or feedback from public sector to the private sector in return. Basically, what jurisdictions are doing is they aim to comply with the FATF recommendations, in particular with Recommendation 10, requiring financial institutions to conduct customer due diligence and monitor customer relationships. Financial institutions try to understand who their customer is by complying with Know Your Customer requirements, and then screen and monitor their customers' transactions to prevent them from being used for or for money laundering and terrorist financing or other financial crimes. And with this monitoring, it is possible to identify which activity is unusual, some outlying activity that may warrant further investigation, and when the investigation gives rise to a suspicion being formed, then the suspicion is reported to the local FIUs. This is the traditional method of transaction monitoring and reporting of suspicious activity, which, as we know, leads to high rates of false positive alerts, and it's very ineffective vis-a-vis the costs that it involves as well. So I'm hoping that this appetite and this interest in establishing public-private financial information sharing partnerships, like the one I had the opportunity to establish in Argentina during my tenure, will turn into reality, and we'll shortly see more PPPs operating in the Latin America region.
And you have been responsible for establishing a public-private partnership in Argentina. You were also chair of the Egmont Group of FIUs around the world as they were looking at public-private financial information sharing and the role of the FIUs. With that experience, and now in your more international role in the private sector with K2 Intelligence, where would you like to see public-private information sharing get to over the next 3 to 5 years? What's that kind of ambition for how the system could develop?
Well, I think in regions where partnerships have not been largely set up yet, like Latin America, I would like to see a greater development of public-private financial information sharing partnerships, particularly with traditional financial institutions that I think could lead the way also by reaching out and promoting the development of these partnerships. I see a much greater need for strategic partnerships at this time that can help us better understand the evolution of risks under COVID-19. I believe the current context under COVID-19 has generated a need to recalibrate our understanding of emerging risks that result from the changes in criminal behavior. And I think the best way to achieve this is through greater information sharing and greater public-private collaboration. I think the private sector needs to be proactive. It should invest the necessary resources to be able to take a proactive, intelligence-led approach to financial crime mitigation. This is fundamental in the current context where intelligence, I believe, could help us all understand the evolving trends and patterns in financial crimes that COVID-19 is generating. I think the private sector is the first line of defense, and its understanding of the threat at this moment, which can only be fully achieved, as I said, through a proactive, intelligence-led approach, is really fundamental for the broader understanding of emerging risks that countries need to reach. I think, Nick, that this effort needs to be complemented with greater private information sharing and public-private financial information sharing partnerships. It's only through the broadest possible form of information sharing that we will be able to grasp, I think, a full understanding of risks and recalibrate the policy responses accordingly. Look, for several years, Latin America has been affected by the loss of access to the main financial centers caused by the phenomenon of de-risking practices undertaken by financial institutions at the main financial centers. It is my view that de-risking is very much influenced by the lack of adequate information capable of helping decision makers form and adopt well-substantiated and informed decisions. But of course, informed decisions can only be adopted with adequate access to information, and the barriers to private financial information sharing have prevented this from happening and still continue to prevent it in much of Latin America. So these are the type of barriers that we have to lift. These are the type of challenges that we have to overcome. Without adequate and precise information, those making decisions on whether to open or maintain a correspondent account, for instance, will be leaning to base such decisions on general open source information or on public perceptions, which many times could be inaccurate and even unfair. And likewise, I think the public sector in Latin America should have an acute understanding of risks and of its key players so as to calibrate its regulatory approach and set the right type of expectations accordingly. There is no better way to achieve this than through public-private financial information sharing partnerships.
I think it's really interesting you raised that whole area of private to private financial information sharing to detect risks. Obviously, the criminals operate across financial institutions. Serious organized crime very often is transnational, and yet so much of the reporting framework encourages thinking and activity and analysis in silos, in isolation. We know there's significant developments in the Netherlands, and other countries are also looking at private sharing, somewhat looking back at the experience of the US with regard to the Patriot Act 314B. So I think that will be a very exciting area moving forward.
Absolutely.
Coming back to public-private information sharing, as someone who's established a public-private partnership in Argentina, could you talk us through, your experience from that process, the lessons you draw from that about the conditions for success, and how to get it moving?
Sure. Well, Argentina was, I believe, the first country in Latin America to establish a public-private financial information sharing partnership. We opted for what we call the soft model or the strategic model, simply because our laws prevented us from going into a more operational type of financial information sharing. We needed legislative changes that we were not able to pass and have not been able to pass for the moment. But we had the possibility of implementing a strategic type of partnership that could help us grasp a better understanding of risks. As I said, I believe the private sector is the first line of defense there, and through the information and collaboration that the private sector is able to provide, working jointly with the public sector, jurisdictions are able to understand, to grasp a much better and profound understanding of risks and recalibrate the policy response accordingly. In our case, we brought together under our partnership to begin with the 7 largest reporters of our system, and began putting together an agenda of projects to work on together, particularly focused on precisely on the understanding of risks in the banking sector. We also addressed issues related with the quality of reporting, and took advantage of the public-private partnership to provide more focused feedback to our largest reporters, and clarify the regulatory expectations from an FIU, from an FIU's perspective with vis-a-vis the reporting obligation. I think this was very much appreciated by the banking sector, that had an opportunity to meet on a regular basis with us, with a high frequency actually of meetings, to openly and candidly discuss the challenges, the difficulties to complying with the reporting obligations. This gave us also, as a financial intelligence unit, the opportunity to understand the challenges and to basically recalibrate our system to make it more adaptable to the realities and the possibilities of compliance by financial institutions. I think you know, the experience really left us with a very positive taste on both sides, and I'm very much hoping and looking forward for the new government and the new administration to continue with this dialogue. I think it's an excellent tool in the current context, as I said, to now focus on the understanding of evolving risks resulting from the changes in criminal behavior. So the tool is there, and it's really an opportunity to take advantage of it. As I said, I also hope that other countries will take the lead and implement these type of partnerships and benefit from them as well. The context really justifies it, and I think the experiences demonstrate the benefits that these partnerships bring.
And what would you say was your biggest challenge when you were going through that process of trying to establish a partnership?
So the public-private partnerships may face a variety of challenges, you know, both at the jurisdictional levels and at the entity-to-entity with the partnership level. So in our case, we had, of course, legislative challenges that we had to understand. As I said, to go into a more operational type of partnership, we needed amendments in the legislation that we had to basically defer for a second stage. There were, of course, also security challenges related with the protection of classified information. Because we opted for a strategic type of partnership, we were less concerned with those, but still, it was important because we were holding meetings at the FIU, going through sensitive areas of the premises of the FIU, and you know, discussing openly also you know, information that could be understood to be protected by secrecy provisions or rules. We had to make sure that we were within the realm also of the law at all stages of the dialogue. I think the cultural issue can never be left aside, particularly in countries and regions like Latin America, where there is a sort of natural mistrust or lack of trust, I would say, between the public sector and the private sector. possibly a consequence of the recurring financial crisis that the region has experienced, where one side tends to blame the other for the responsibility of the crisis. This has generated an unfortunate distancing between the public and the private sector. What we tried to do during our term in Argentina was to rebuild those bridges, to reconnect, to re-engage by reaching out to the private sector. At the beginning, there was a certain natural mistrust because they were coming from many years of working in silos, of separation, and it took a bit of time to persuade, I would say, the private sector of our good intentions and also of the benefits that this could bring to them. But as we started, working together in partnership, I think it became very evident how beneficial these type of arrangements can be, particularly to the private sector that can have a much closer access to government officials, a much greater understanding of what the vision and the expectations from the regulators are, and therefore can bring that back to their day-to-day work and implement a much more efficient and cost-effective also way of operating internally. That was our experience. I think an area that deserves a lot of attention because of the unfortunately poor statistics and poor numbers is the issue of asset recovery. And this is another aspect where I believe that public-private collaboration is of the essence to facilitate a more effective approach to asset tracing, to asset securing, to forfeitures and confiscations, and eventually to transnational asset recovery efforts. There is a lot of money that is stolen from countries through financial crimes, corruption, money laundering, other types of financial crimes, and very low percentage of assets that are being recovered. This is not good. Doesn't speak good about those of us that have worked for decades in the global AML/CFT efforts. This is an area that deserves and needs to be urgently improved, because if we don't recover the proceeds of crimes, not only are we not, I think, being effective in our efforts, we're also passing the message to criminals that crime pays off, and crime must not pay off. We must deter crime. To achieve that, we must deprive criminals from their illicit gotten gains and assets. I think there is a great opportunity to improve asset recovery through greater public-private collaboration that can put in motion a joint and coordinated effort to deprive criminals of their assets.
Fantastic. Well, these videos inevitably are only provide a glimpse of all those insights onto the issues that you've raised. We only have a limited amount of time, but thank you so much for sharing your time and your insights in this call today.
Thanks, Nick. I really appreciate the opportunity to address your audience and to speak with you as always.
Fantastic. Thank you, Mariano.
You're welcome.